Hey, what's up guys, how you guys doing? In this video I'm gonna be showing you how to find direction of the market 10 minutes right before when market opens. So let's get to the video. Hey, what's up guys, this is Isaac back with another video. And if you ever wonder, or if you ever don't exactly know what the market could do at a certain day, or whenever you don't feel very certain about what the market might do that day, I'm gonna give you 3 simple tricks in order for you to find direction within the market to know if it's even gonna go up or if it's gonna go down. So let's get to the video. Okay, so the first thing that you have to do is you have to check for higher time frames. Okay, so whenever you want to know if the market is gonna go up or if it's gonna go down, the reason why you have to go to the higher time frames is because you could be potentially be heading to a certain direction and making you think that the market might go bearish, but at the end of the day it's just a pullback, and in reality at the end of the day market was supposed to go bullish. I suggest you to look into the daily and the 4-hour time frames, and whenever you're gonna place an entry, always look for the 15-minute or the 5-minute in order for you to look for your entries, because that has more stability in terms of what the market can potentially do for that day. And tip number 2, you always have to check up on news. You have to be really educated about the day that you're trading, because if you're gonna trade on a day that might have big events such as the FOMC meeting or the CPI or PPI events that could influence the dollar a lot, that might mean that might be a little bit of more volatile movement within the market. So you have to be prepared for that. So I always recommend you guys, just before starting your day trading day, just make a plan. Before you make a plan, you always have to look at the news. And so always, please guys, make sure to check up on news and be careful. I really suggest you to not trade on news, but if you're an expert and if you know exactly how to read the numbers on the news, you know how to read the CPI numbers and the FOMC meeting and everything, at least be careful. But if you're really a beginner and you don't know a lot about how the market moves when there's news, I really suggest to not even trade at all, but just observe. Just observe and observe what the market does, just so you can get more prepared whenever you are a more experienced trader and you can have more skin into the game whenever it comes to trading on news. Okay, so that's tip number 2. And tip number 3 is always wait 1 minute or maybe 2 minutes after market opens, because when market opens, a lot of buyers and sellers, I'm not quite sure what the market could do, so a lot of people are selling and a lot of people are buying. So that's why the market tends to be really volatile at the beginning of the trading day, right when it opens, because the market is unsure. So you have to wait for at least 1 to 2 minutes in order for the market to stabilize, for you to be correct with your bias. Those were the 3 tips. I really recommend you to be careful when most importantly, be careful when you are trading on news. If you are a beginner trader, I highly recommend you to don't trade. Just watch, observe the market, just trade on demo. If you are going to be trading news, just trade on demo. Try to open up a demo account. If you are trading a prop firm or your own capital, just put that account aside and start trading demo. And just for the news, do it for the news. And whatever perspective or analysis you have for that day, do it in a demo account as if you were in your actual prop firm or personal capital account. Why? Because that's just gonna make you get your skin in the game and actually make you realize how volatile it can be to trade on news. So please be really careful with that, guys, and also be careful when the fake outs occur at the beginning of the trading day, which is when New York stock market exchange opens. So yeah guys, be really careful with that, and don't forget to use the higher time frames in order for you to see the bigger picture of the trading day. Always mark your support and resistance as well. I'm gonna show you that a little bit more in detail in my trading view, so you guys get to know a little bit more better about it. But yeah, so let's go to the computer. Okay, so guys, this is the trading view part of the video. I'm just gonna explain to you a little bit more the tips that I was going to give you. I just want to explain myself a little bit better. So as far as the first tip, which is your market structure, you have to actually market within the 4-hour time frame and the daily time frame. So I always recommend you guys to always look for the higher time frames in order for you to take a clearer look of what the market could do for that day. So if you go to the 1 day or daily time frame, whatever you want to call it, as you guys can see, in this pair, which is gold, it seems a little bit bullish. As you guys can see, it's a really bullish structure here. It's just a little bit of consolidation as of right now, but it's just a matter of time where price continues to go bullish, because we have an uptrend. As you guys can see, we are in an uptrend and we are clearly bullish in this pair. Okay, so from the daily time frame, I want you guys to go to the 4-hour time frame in order to see a little bit more detail of what the high time frame could look like, which is like this. As I told you guys, we are in a consolidation zone, which is this one right here. So if the market was to open right now within the next 10 minutes, the first thing that I would look at is, I already told you guys that we are in a consolidation zone, so I would mark my support and resistance lines, my support and resistance zone, which are right here, and then I will go a little bit farther down into the 15-minute time frame in order to see what the market was doing. So I'm gonna go back and show you guys what it looks like on the 4-hour. As you guys can see, we kind of look like we are in a downtrend in the 4-hour time frame, but it's actually maybe a sign that the price may be doing a pullback in order to continue its continuation up to the upside. So as you guys know, I'm gonna find my support level within this movement, which is going to be right here. I'm gonna mark it right here. This is my support, and then I'm gonna go up to the 15-minute time frame, and this is a clear sign of support where the actual price is respected. This is a zone where the price is respected. So what am I expecting if it were the case where the market were to open 10 minutes from now? So as you guys can see, price is respecting support, so I will draw a resistance zone, which would be like around this area. I really would like to see the price to go from this zone to this zone. Why? Because it's respecting support and resistance. Another confirmation that I would really take is the Fibonacci key levels. I would have to see where the price of gold tends to pull back or retrace from, and then I would take that percentage of the Fibonacci and then I would match it with other pullbacks in order to have more clear understanding of where the price tends to be retrace from. So as you guys can see, I would draw my Fibonacci key levels from this low to this high, and I would have it right here. If it goes up to the 68 to the 78%, which is a very, very clear sign that the price is doing a full retracement to the Fibonacci, the best Fibonacci key levels in my opinion. So this is where I would take my buy position. So I will go for the long here, and my target would be the resistance, which we talked about before, which is this one right here. And my stop loss would be right below this resistance, which would be just like around right here, and this would be my entry for that day. Let me take this out, and this would be my entry. This is how I would do it if the market were to open in about 10 minutes from now, which is obviously not true because it's around 10:21 p.m. of the night. So at this point, I'm just like making you guys an explanation of what the market could do. So yeah, this would be my stop loss, this would be my take profit, and if we were to if the price were to show me a bias of a short, or the price could show me like the price is actually tanking, the price is actually coming down, I would look for my position of sales. I always have to have a plan B within my trading plan, and if one of them doesn't really place out, then it doesn't place out. I just place one trade, max 2 trades for the day in case it's liquidity, and if it doesn't work out, it doesn't work out. I just close everything and I go about my day. That's it for today. I'll come back tomorrow because I don't like to be over trading and stuff. So if, let's say, this is my bias for the long, if I would go short, I would place my short position right under this resistance key level, this support key level as I show you guys, and I would place my short position like around this key level, and my target point would be this last low over here. So this would be like a very 1 to 2 risk to reward ratio. The buy options would be a little bit higher, like a 1 to 6, but you guys don't ever want to get greedy. If the market if the market tends to do this, let me show you guys. If the market would actually do this, then this is where I actually take my position for sales. And if the market would show me like a bullish bias, I would expect the price to react from this fib and continue its continuation to the next resistance key level or previous high. This is how I would do it if I didn't have no clue of what direction the market could do for a certain day. This is one of the confirmations that I was going to explain to you guys more, and the next two is basically very basic. All you have to do is you have to go to forexfactory.com, check for news. Wherever you see a red folder, you have to actually look into it and see what could potentially do to the market. Is it going to affect you a lot, or is it just something that might not even have anything to do with your pair or currency or stock that you're trading? I always recommend you guys to check for the news right before you start trading, because this could actually impact your trading day and your trading plan as well. Always look for these red folders and always try to look into it and try to read and try to understand what could potentially do in order to your analysis with whatever pair you're trading. Always look out for news, guys. This is very important. And the last thing obviously is you have to wait a little bit after markets open, because it's very volatile in the beginning. When the New York Stock Exchange opens, there tends to be a lot of indecision within the market if the price is gonna go short or it's gonna go long. So you actually just give it like 30 seconds to a minute, maybe 2 minutes, and start to see the direction of what the market is actually going to. And whatever, in this case, if the market would show me, instead of going bullish, if it would show me that the market is actually gonna go bearish, I would delete this bias and I will only take the trade that I had in the bearish bias. If the price would show me a direction that the price actually wanna go bearish, I would delete my long bias, my buying bias, and just start focusing on the sell. And if the trade plays, it plays out good, perfect, that's it. But if it doesn't, that's okay. I'm not gonna trade for the rest of the day. I'm just gonna move on with my day, and I'm gonna come back later on and back test what I did wrong and what I could have potentially done better. Okay, so yeah, that was pretty much it for this explanation. I hope you guys understood, and I hope you guys got a clearer explanation of what to do in order whenever it comes to placing a trade. If you are new and you don't know a lot about this, I really recommend you to join my Telegram group, where I send a lot of signals and a lot of analysis as well. So yeah, I hope you guys like this video, and I see you guys in the next one. Bye.